Welcome to Born to be Scaled, the show about building businesses that are designed to grow. I'm John Friedman, together with my co-host Sam Morehouse, and supported by Barry Cranford and his team. We speak with founders, builders, and investors about what it really takes to scale a company. Sam and I started our careers together on the grad program at Morgan Stanley, and after 20 years in finance technology, now both run our own businesses. In each episode, we unpack the real lessons behind scaling companies.
Thanks everyone for joining. Welcome Tom McKee from TransFICC and also my co-host today, John Friedman, regular co-host. I'm going to dive straight into the first question, Tom, and it's about how you got to where you are today. So where did you really learn about fixed income technology and what did your career path look like before you got to TransFICC?
Wow, fixed income technology was I learned a little bit on the job, I have to say. I started my software development career investment bank called Standard Bank, which was 2010 2011 time. That was, I think it was the end of the year of graduate scheme sort of thing on year in the end, because it was off the end of the financial crash. So yeah, they actually ran a really good graduate scheme there. So everyone they hired, we put on a 3-month intense finance training course where so like if you're in investment bank trading, technology risk, everyone did the same thing around. You actually learn how to run a bank. So you learn to run a risk book, how you sort of offload your positions or trade on behalf of customers, all this sort of thing, presenting back to the business. And then off the back of that, you then go work in your various business units. So I was mainly working in equity derivatives, and then later I worked on the commodities desk, sort of running not trading, but doing a lot of day-to-day sort of tech tasks for the guys. So there's a few people running different books where they couldn't get knows all of this position. So I did a lot of work there. And that's really what exposed me to finance in the first place. After a few years there, I went on to a place called LMAX, which I guess a number of people know. Well, now it's more crypto and FX, but at the time it was FX. I also learned a lot about how exchanges and things run, but that was a lot more honing my software development craft. So obviously Dave Farley, Mike Thompson are big names off the back of LMAX, but that really showed me a lot around sort of continuous integration, continuous delivery, the paired programming, fast feedback. So I guess a little bit less finance there, but a lot more about quality of software and what's actually important and being able to maintain a delivery cadence. So whilst there, I met Judd and Steve, one of my other co-founders at TransFICC. Judd's also a technologist. Steve, very much sales through and through. I think his whole career has been doing sales into investment banks. And so at some point, Steve left LMAX, and whilst he was on a journey elsewhere, he kept getting pitched on the idea of providing a unified API in fixed income. And that was something that already existed. And so he approached Judd and myself, and we were like, oh, we'll go start business. So actually, my exposure into fixed income was actually somewhat minimal before that. I'd used a lot of the technologies that we have to use today as part of the company, but my actual fixed income business knowledge is actually somewhat minimal. But I mean, I had exposure in various parts of finance up until that point.
So, for those in the audience who haven't had the pleasure of working in banking all their lives, can we dig a little more into what fixed income means and why coming out of LMAX as an exchange environment covering FX, it was different but similar?
Yes, I think fixed income it's a very generic term for covering a lot of different asset classes. Like in the day-to-day world, people usually talk about FX, Forex, or equities, buying and selling shares. But when people say fixed income, that could mean a whole different bunch of things. Prominently, people are usually referring to bonds, so either government bonds or sort of credit bonds. Credit bonds are a little less common, I guess, in Europe, UK, very, very big in the in North America area. But on top of that, you've also got credit default swaps. People probably remember the Greek debt crisis, a lot of the CDS things off the back of that, and interest rate derivatives. So a lot of fixed income as a whole has been a little bit slower towards electronification. There has been movements very early on, especially in US treasuries and areas of other government bonds sort of areas, but other instruments less so. And so in the world of equities and FX, everything's traded on an exchange. There is exchange traded flow in fixed income, but there's a lot more what you would call sort of request for quote flow where instead of having like a central order book where you have prices and everything, you want to buy or sell some, I don't know, Apple bonds. The price isn't necessarily discoverable. So you have to go and contact banks individually to try and get those prices. And so there's a lot more fragmentation in that market. And also the market's just a lot bigger. The amount of different asset classes that sit under fixed income is huge. And so because of that, that's why things like products we offer, the one API products, very useful just because of the fragmentation of the market. I don't know if that necessarily answers your question, but it's a little bit into this fixed income.
It is useful, and
Yeah.
I maybe narrow it down for the start of the TransFICC story, in that you mentioned Apple bonds. Apple's got a stock, it's got a ticker, you can look it up. It's probably got the price in the Financial Times paper. They issue bonds and they still have identifiers that you can look up. So when you go across the street, like the street coming from Wall Street, there's lots of different banks who will give you a price for these bonds, but there's an ID that you can use, and everyone's talking about the same thing. In the world of fixed income, which we might touch on a bit more later, you can get quite a bit further away from that, where you say one thing to 5 different people and you probably mean the same thing, but after you've traded, there's quite a lot of legal documents to make sure you did mean the same thing. When we look at the origin story, and you keep being asked by potential clients at this point, we need this thing, can you build it for us? What was it that was driving those requests? Was something broken that needed fixing, in quotes? Or were lots of banks looking at a problem and seeing big costs and wanting to mutualize it? Like, what do you think was driving your opportunity at the start?
I mean, there's always a cost driver with these things, especially when you're dealing with banks. I think there's a forever, how do you cut costs perspective. And the space we're in, which I guess initially was providing connectivity, that was a market that already existed. There's already competitors in that space, but we founded TransFICC in 2016. So it's actually our 10-year anniversary this year. And at the time, there was more of a move to, or more of a willingness, should we say, in investment banks to move to like a software as a service model. So previously, your vendors you bought in, you hosted their software on your servers, and your servers were actually in your building quite a lot of the time. Now, it's more common for people to be in like Equinix data centers and things like that. Or 10, 15 years ago, you had your servers in your building or in your buildings as such. And so then when you were buying like a vendor software, there's always an element of handover, and you were the one who had to sort out the network connectivity, get the servers in. So we were coming in from a point of view of we will provide all the connectivity to the venues, we'll provide the servers. You just need to connect your price into our gateways. And so that was part of it. We were competing on price to an extent. Like I said, there was already vendors in the space. I would say we weren't really trying to undercut people at that point. As Steve, I think, to be honest with you, having a co-founder who is like so much sales experience makes a huge difference for starting a company. Because it wasn't just Judd and myself coming and going, oh, we're technologists, we can use the latest technology to create a great product. It was very much Steve spearheading I found the business opportunity, and I think I can sell this if you can do whatever. And build something that doesn't fall over and actually solves the problem as well. So actually, we weren't really trying to undercut the other vendors, but it did reduce sort of, I guess, the price ranges you could charge. So like a floor ceiling sort of thing. But we were trying to pitch more in terms of, we're going to handle all the maintenance of all the updates, and we're going to provide like some numbers around throughput and latency. So you're not going to need to provide the same level of support, because it's a hosted service. You don't have to download the logs, send the logs over to us when you have an issue. We investigate, come back to you, give you a patch. We're going to handle all the sort of investigations and patch upgrades and things like that. So you'd have to do it. So we were pitching it more on that sort of thing rather than purely price. So I was trying to solve a bit of a problem in terms of cost cutting in another way, not like on a price thing, but in terms of you're going to enable you to do other things, and providing a sort of a canonical like form model to make all the trading venues look very similar. So your actual cost of introduction of adding new trading venues becomes more of a business decision rather than going, okay, you've got this new trading venue. We need 6 months of development to get it live. So, well, can we make that into business desk? You just need to get the legals through and then you can move on. That was kind of what we're aiming for with the One API product at the time.
Going back to your the earlier stage in your career, Tom, before TransFICC, did you want to be a vendor? A lot of people have, they're on the inside and they are doing their day jobs, God love them, right? And they feel this constant pressure, this constant frustration, and then something snaps and they leave and they build the thing that they always wanted to, and then they try and sell it back to their previous employer. But you were asked to leave, right?
I don't want to speak on behalf of Joe, but Joe, I would say, has always wanted to be a founder. He's like, he's always had, I think maybe it's like his background or something. I would say I've never really wanted to be a founder, but then I also sort of reminisce over things I did pre-TransFICC, and I had sort of started 2 other companies like on the side. So maybe,
Right.
but they were never, I'd say it was more, I knew people technical skills and they didn't have the technical skills and they wanted to launch like websites or apps and things like that, and I'd help them build those things, but that was never really I'm going to quit my job and go do this. It was very much I'll help this, because I enjoy playing with new technologies and trying new things and help them out, but I never saw that as this will be my career. And for me, I don't think I ever when I want to go start my own company. At the time, it was a situation of I was contemplating I might want to leave where I currently am. And this opportunity came up. And it's a lot easier when you don't have kids and think like less responsible and a mortgage to pay and other responsibilities to take these risks. I think if Steve came to me now, I would probably be, I don't think I would necessarily jump at the chance, but at the time I was hungry to try something new, like the idea of sort of part of the problem with me when I was trying to leave LMAX at the time is I really liked a lot of this like pair programming, continuous integration, continuous delivery. And there was not too many companies actually out and out advertising, this is what they do, and so actually finding a job was difficult. So if you can create a company that follows the things that you care about, it just makes things a little bit easier, I suppose.
There's always a bit of survivorship bias, but 10 years in, still going, it must have been a good decision, I think.
Wow. Yeah, I've enjoyed it. I really have enjoyed it, and I don't regret starting my own company, I have to say. It was the first hire was probably the scariest thing. Actually leaving and starting the company wasn't too bad. It was when the first hire. I was like, I won't swear, but I was like, oh, I really can't mess this up because someone's actually trusting their livelihood in me. No, Steve Judd and us, I was like, oh, we're just 3 idiots here and we don't know what we're doing. But when you actually start hiring people and they're trusting you to like not crash the company and actually grow it, that was some real responsibility, and that was really like a bit of a turning point for me.
Yeah, I think anyone who's had direct reports, and felt that pressure around mortgages, paychecks, yes, it's not a joke.
Yeah.
If I pick up on something you mentioned around providing the hardware, and also something we talked about in our earlier prep call, your starting premise is I'm going to provide a solution to your problem and I'm going to do a load of expensive hardware as well. And you talked about like you mentioned Dave Farley, pair programming, this focus on quality above speed, and the reluctance to cut costs. Did that mean when you started, you were building a expensive premium product before you knew people would pay for it? Or did you know that was what the market wanted?
We were definitely burning a lot of money to start with. So when we started off, the hardware costs weren't too much. Well, they weren't an issue because we were self-hosting on AWS and EC2, so we just could spin things up and down as and when we needed to, and we were also able to utilize a lot of sort of free credits at the time. So from a hardware perspective, that wasn't too bad. But we were the first 2 venues we integrated with, which is one of the Tradework venues. I can't remember which one. And I swapped. They didn't last a year. They both went within a year because we made some like architectural mistakes, things like that. We were trying to build something, but we didn't actually have any customers, which makes it very difficult to know. You can have an idea of what you want to build from a reliability support perspective, but there's always a question of what data do people actually need and how do they actually want to interact with it. So there was a lot of cycling there. But quite early on, because we started the company in 2016, 2017, and this is something we've like repeated along the way, we had a strategic investment from Main Incubator, who are that you branded now. I should know their name, but I've forgotten. Who are an offshoot of Commerce Bank, so the investment arm of Commerce Bank, and so Commerce became our first customer. So that was a strategic decision where they could help us guide in terms of what we wanted to build. And so that gave us our first legs in terms of first customer, have some revenue going for a ball. This is a legitimate company, because this was another issue we were really struggling with. And B2B sales is difficult as it is, but B2B sales is to large investment banks with multiple legal entities across multiple territories, very, very hard. And it's becoming even it's harder and harder every year in terms of like the compliance point of view and just the amount of paperwork you have to get through. Actually having some revenue in the door really helped us. And that was our first, probably, like, it was like if you look at it from a 10-year scale, it's a very small tick. That was something, we were nothing to something point, which was very big for us. Obviously not monetary a massive deal, but like for us, from a momentum legitimacy point of view, that was a huge step for us. And like, we're always very thankful for those guys for investing in us and using us, sort of like utilizing us for their platform. I would say the proper big step change was in 2018 when we joined the Citibank Innovation Lab, and they really took us under their wing and helped us sort of build out, well, we're wanting to revamp our European trading flow, and we're going to use you to help us. And Commerce Bank, great company, everything like that. But Citibank has some real legitimacy in terms of where they sit in the world of fixed income, as well as like banking in general. And that gave us, as well as like Citi on our like sort of customers, and they needed some advertising for us as well. Just having them as like a publicly available customer, that was a massive, massive change for us. That's when like people started calling us at that point, which was like really, really quite good. And that was when we became a little bit more comfortable, I have to say.
That's great. We see it across all the types of companies we talk to. Incubators are great. A design partner client, especially a big one with credibility, is great. It sounds like your first two big partnerships tick both of those boxes. We want to shamelessly plug the episode we did two times back with Barbara at Finbridge Global. She is trying to solve the problem of selling into big investment banks. So check that episode out when it goes live on YouTube. Sam, over to you.
Yeah, the next question is about your faith in the future market. So just this like point at which you leapt from having a day job to going all in on a startup. Just tell a story about how you got the word that this kind of platform was needed, and how you went about validating, that like market assumption before you made the leap.
That was less to do with me, I have to say. So Steve was out working for a company. I can't remember the name of the company. He was working for another company, but he was also trying to sell into banks at the time. He was going, "Oh, do you want to come buy this thing?" No, but what I really need is this. I need a connectivity platform in fixed income. This is what I really need. Can you build this? And he goes to another bank and go, "I've got this lovely new product to sell." And like, no, what I actually need is this fixed income connectivity sort of platform I need. And so he actually went back to the company he worked for then. I was like, I think we should do this. Like, so he actually pitched it to the company he was at previously, and no, we're gonna stay in our lane. But thank you for reporting back to me. And I guess Steve, he was like, no, I think this is a good idea. I'm gonna go for it. And so, what we did in terms of trying to validate. I mean, could we have done more due diligence beforehand? Maybe. It's hard to say in hindsight, because hindsight's always hindsight. But we did call up all these people who were saying this is what we need, and they take meetings with us, and we go speak to them, try and find out what they wanted, and they'd be like, yeah, we're really, really into it. But then it's can you actually pay for this? And it was like, oh, no.
I mean, trusting the people who are honest when they tell you what they want.
Yeah,
right.
And it wasn't through. Part of the problem is there's. When you're selling things, and when you you might have the best product in the world, but you have to take everyone along for the ride. So there's always the business heads, and then there's the technology heads. So a lot of these places, they're almost like two distinct systems. It's actually something that works really well with Citi. When Citi, the technology were the business. So when they were making that decision, they were making that decision together. Whilst at other places, you'd be talking to the business and go, yeah, we want it. And they wouldn't talk to their technology people, and technology people maybe legitimately, maybe not legitimately, go, no, we don't want this. It might be because they weren't taking along for the ride, or maybe it's because actually they want to do something else. And so you get caught up in a little bit of these like internal politics. And then on top of that, you've got budget, you've got the legal, oh, you're not an onboarded vendor, like, so we can't use you. That's like a 6-month, 12-month process. So it was very hard to validate. We knew there was a business opportunity there, but it's, can you get enough sales in before you run out of money? Is, I guess every business has this, but for us, we knew there was going to be a 18-month sort of some saying yes to actually the money coming in the door because of like the vendor. And I don't think any amount of due diligence can actually get you through that from looking at it ahead of time. And I think that's one of the reasons why you end up with fewer numbers of just like technology service providers in this space, is just because of the actual upfront cost is very high, and you have to have
gauntlets, right?
Yeah.
Just talk a little bit for the audience, because I've been through this.
You must have similar things, like you must have similar things in your business as well.
Very, very, very challenging when you're a small vendor or a new vendor facing off against a very, very large international, multinational client. Just talk us a little through some of your war stories. Talk a bit about like getting those gigs.
I have to think carefully about this, make sure I don't. And I think one of the
client A, client B, client C.
One of the more interesting ones was we a large American bank. We met them in their London offices, and they said, "Oh, we're gonna do this thing with you." And they're like, "We're going out for dinner because we're gonna get this deal done tomorrow." They were bring some people on you want to like hire, who you haven't been able to hire, and we'll like help you pitch them to come join your company. And we went off and had this dinner, and the next day they called us up and said, "Oh, yeah, deal's not going through." And I've never really got to the bottom of what actually happened there, but they are a customer now. But that really felt like
extreme highs and lows in 24 hours.
That really felt like the carpet being pulled out of us. We had a really good. There's one of our public customers, Santander, and they were initially just using us for like some swaps and not doing too much. But they were trying to pitch. They were doing a whole internal technological revamp, and they were wanting to do a live demo to their business. But the day they wanted to do it, the venue, not going to name, went down. The venue they were using went down. The whole test environment was down. And so we scrambled together and like in an hour, like made a fake trading venue for them to like interact with and mock it out. And so then they pitched to the business. Business loved it. It's amazing. And that was, and they were just like so over the moon that we were able to work together, like, and actually like help them do that end-to-end project. And so they're like, yeah, we're going to go forward. We could have just turned around when our staff problems, the trading venue's like not working. Then maybe their project gets canned, you lose a customer. Is that not good? But that's not good for us. The fact that we turned around like, no, let's try and get some, what can we do now to like get something working here, because kind of all our jobs are on the line here to some extent. And that was like that was a high compared to the low of what I just mentioned. The compliance and everything else, it's just the check boxes and things you have to go through in terms of like, they would like some of the things people ask around like sort of employee background checks and things like that. We have to push back and go, actually, no, these aren't things we're going to do. You're just going to have to trust someone and whatnot.
That Santander story is amazing, and it really reinforces for me the point about fragmented markets and being the connectivity provider. So you could argue you kind of won that business because you could demonstrate your platform can connect to this exchange or marketplace that's down, because you're able to mock it out in an hour. Like, if you didn't know everything there was to know about that marketplace, you wouldn't have been able to do that. Did that become part of the sales pitch, in that, oh, you've just opened your office in Japan, or I guess at the moment the UAE, and you're going to want to connect to X, Y, and Z, and we can do that for you?
We don't really do too much in terms of stubbing out of like mocking venues, I have to say, just because people want to use the real trading venue UIs. We do now have so in, I think it's like 2022, I think right at the end of like the COVID lockdown bits, we launched a like a ticketing UI. Previously, everything we've done is like API related. We've sort of built in all the pipe work or the foundation, having like a unified API, and we build now build like a trading system, ticketing system on top of that, where we have like marked out a lot of the venues. So frequent ones, sort of like market access, Bloomberg, JWeb, so that people can just like log on and like sort of play with our ticketing system now, rather than having to wait for be onboarded with the venue, get the trading, get the connectivity, test connectivity details. It's just something that from an API perspective, it's less. The value of like mocking up the venues is like less valuable there, because actually people want to interact with the Bloomberg terminal and like raise an inquiry and see it come through, see the data that comes through, because from an API perspective, they usually have some sort of price or some sort of auto negotiator on their side, and they want to plug it in with the real venue to see where the gaps are with your system. So the ticketing system, it's a lot more about, well, what features do you have in the ticketing system? What data are you showing? And like actually stubbing out venue and things like that's a lot more valuable. There's a lot from like a sales perspective or like approaching new customers. We do use sort of like the Fate venues from that perspective now, but previously Fate's API from an API perspective is useful for, I suppose, maybe some like regression testing and things like that. But actually from an integration point of view, you want to be integrating with the real thing. And what's the phase? Don't mock what you don't know.
It's a nice under the radar sales technique if you can get above the actual vendor in Google rankings for how to do X with Y, because their documentation is private and yours is on your website. It's interesting. So we wanted to touch on this shift as TransFICC's grown or matured, however you think about it. You started building what your customers told you they wanted, and have started to build maybe more opportunistically or based on what you think people are going to want. What made you as a business change, and how do you decide what to focus on and how to prioritize?
I think, well, when you start, I guess any business, or when we started TransFICC, we didn't have anything, so you just had to build. So people would just ask for something, you build it, you build it, you build it. You really need a certain amount of coverage before you could even consider being opinionated in what you build next, just because customers, there's always 20, 30, 40 venues people want. And it just makes sense to, we prioritize those based on like actual customers we had rather than potential customers. But we always knew this was like a somewhat of a fixed set of venues that we wanted to integrate with. But with our e-trading platform, so that again, with our e-trading platform, when we started building that, there's a core set of functionality you just need. So, and customers aren't going to buy it without it. So it's really that sort of trade-off there. But as we've sort of got to a point where we have, I guess, a solid version 1 or version 2 of our system, you can start looking at and getting feedback from your salespeople, because now that you have something tangible you can show, and there's like enough bells and whistles that like it's enough to people to actually respond to your emails, respond to your phone calls. You can start collecting feedback in terms of, well, in general in the market, people are asking for X feature or Y feature, but none of our current customers like ever pay for this. So like you start looking in terms of, well, or the like return of investment on actually building this up front and then selling it to customers. Well, before we never really had that opportunity, because it was really this customer's only gonna like buy anything from you if you buy this amount of things, and you have to buy this amount of things. It has to be on the contract. So there's no sort of, and then the customer aren't going to wait for you to build it. It's we sign, that goes to the top, you build it now. So there's no even like prioritization, like conversations. It's really someone's paying for it, you build it. Plus now, because we have enough product, when we have a new sale, it's, well, we already have the thing they need, so they can have it. We can now start thinking, well, what do we want our product to look like in 2 years, 3 years, 4 years time? And you can start having sort of that product ownership and having those conversations around priority in terms of, well, what would be really happy with if what we've built by the end of 2026? What can we as technologists build to help our salespeople succeed at selling? I mean, in general, like culturally, we've always been very good at, everyone is very open in communication. When I say open, I don't mean people aren't behaving like arseholes and shouting at each other. I mean, in terms of like, people will ask quote unquote silly questions, and like you're not going to get berated. It's a very like, you can ask whatever. And so like you'll have a salesperson go, people are asking for this, but I've never seen this on our backlog or anything. Does this like make sense? I mean, you'll have technologists jumping and go, oh, I could actually do that in a week. So we try and like build this out and actually get it done. It's you end up people like trying to spike things out, which is like quite nice in a way. I mean, you can work out off the back of that, well, is this a 2-week thing, 3-week thing? Is this going to take us like a quarter? If we spend a dev team for a quarter build this, is this going to provide either enough upsell in revenue or enough additional customers. It's a nicer situation to be in before, where you feel like you're just treading water constantly, trying to just stay afloat. And I guess it's like the next round of where you are from a company maturity point of view when you get to that level. I mean, it's all learning for me. This is all new for me.
That culture that you've built, I always think organizational culture is really kind of interesting, right? Because like you get one whether you like it or not. And if you don't think about it and you know, you're really careful about it, then like it
Well, you've
might
given
be
up
terrible,
control. Yeah.
right? Right? It might be awful, but that's left you in a situation where, you know, you maybe don't have engineers building the thing with all of the bells and whistles that, you know, that don't necessarily translate into revenue, or that don't have a focus on you know, your client's priorities. How did that come about? And I guess the more interesting question is like, how have you kept it as you've grown?
Yeah, you just reminded me of. I'll answer your question in a second. You just reminded me of one of our developer team leads. He has a real thing around. He doesn't like building things that a customer won't use in production within 3 months. He has like a real.
Right.
It's just like he wasn't like an early hire or something, but like I don't know why that just triggered me. To remind me of that.
But that's kind of what I'm talking about. Like that metric is obviously artificial, but like it does help to focus everyone's mind.
Yeah, it's interesting so I suppose from like our general point of view is like we were only building things that people had already signed for. So then like naturally or were paying for. But I guess there's a difference between some of these institutions we deal with, they're happy to pay for stuff they never use in production. If that is actually a thing that happens where people are quite happy to go, oh, that's only like £10,000 or something a year. That's like nothing on my billions. But in terms of like, yeah, from a business point of view, so we started off only building what people were paying for, and then we would push, I wouldn't say aggressively, but we'd try and lean into like, oh, when are you going to use this in like production? How can we help you get this into production? Should we set up calls with the venues and everyone else to get into production? We used to like push that quite a lot. As like initially. And as that's grown, I guess part of what we do is the dev teams, and this is something some of our developers, when they join like now compared to before, are not necessarily used to this, is our dev teams will just email our customers. They're used to having an intermediary like person who like, yes. And so we just go, no, dev team, you want to talk to the developers to find out what they want. Just go talk to them, because otherwise you're just going to end up in a situation where there's someone in the middle who's either going to massively reduce the communication because it's going through a third party who doesn't need to be there, or there's going to be a miscommunication at some point. So just email them and find out what they want. We'll get on a call by that. And we don't try to build the world. We just try to build what people need and build it in an order that makes sense for them, because everyone always was. We try to be like as quote agile as possible. A lot of the institutions we interact with they usually have set block times for. We have 3 months for this project, and that means maybe 2 months of development and 1 month of QA. And so we look at it in terms of, well, what do you want to be doing first? What products do you want to be trading? What venues? And we'll try, and if it's not something that we already have, how can we get that being delivered to a point where it helps you? Because if you're delivering things that people need today, the probability that they'll actually go through to using production is quite high. And so if you spend that time to really, really work out what people need from what they're using in production today, if it's like a migration project, or is it like, what's the business screaming for they need today where they think they'll increase revenue? If you really, really, really focus on those sort of things, it makes a difference in terms of actually building things people use in production. And that's partly from just our developers talking to people. Our BAs do a fantastic job as well. BAs are very, very good at sort of, because they know the venues so well inside out. So they sit there playing with the GUIs, playing with the APIs, and they find all the nuances in the APIs and report issues to the venues, which maybe they don't know about. And talking to our customers in terms of, well, there's this feature that like, are you using this? Do you want this? Would this be helpful to you? And like kind of working out where they want to be, or like, if they're asking for the world, but they only have 2 months, is the world achievable in 2 months? What do you actually want to be able to achieve? And really kind of honing in on that. And I think that makes a big difference on that, and trying to just everyone move in the same direction. From like a hiring perspective, we focus a lot more on like how well people communicate more than, and I think that probably helps a lot, because we focus less on technical skills and more on how people communicate. And I think because we're a remote company, having people who can communicate well really helps from like both a technical and a business point of view in terms of being able to find out from customers what do we actually want to deliver, what's on the contract, what's not a contract, what makes sense for us to do financially versus not financially. And we're very open internally around like what revenues associated to what deal for what customer, what matters, because that really helps. If everyone has all the information, it makes it a lot easier to make decisions around priority and like also why something wasn't prioritized as well, or why it's slightly further down. Because if you're gatekeeping that information, it makes it very difficult for people to understand these things.
There's so many little nuggets around the culture and contributing to the culture. I tried to note a few down because they resonate with me and how I've run teams before. So a whistle stop recap through my rose tinted spectacles. When you have that small team, and I always said, so what's the difference between working for a bank and working for a smaller company? It's like, well, you build things and you get to see people use them. And if you have that metric of if our customer isn't using it within 3 months in production, well, you don't see anybody using it because they aren't using it. That kind of is a bit demoralizing. So focus on not doing that and talking to the customers as well. This idea that you need a layer, because you mentioned you still have a business analyst role there, understanding how to use the product, but they aren't sat as this translation layer between developers and customers. I think you've built an inclusive and engaging environment for everybody. Well, my assumption is that translates into increased retention for your employees and reduced turnover.
Yeah, I mean, having BAs is less to do with a communication thing and more developers are very good at doing, developer by trade, are very good at doing certain things. And to be honest, if you're asking them to analyze business things, they will always come in with a very, very technology developer hat on and maybe focus on a lot of the wrong things. Like a business analyst, someone who's very good at doing analysis in general, will not have those same shutters on and things like that. And it's a lot more about that, I have to say, about communication.
Scaling an organization in terms of revenue and client base is one thing, but you're also looking at scaling the number of staff you have in your organization. What are some of the challenges that you've faced so far, and where are you at, and what are your projections for the next year or so?
Yeah, so scaling in multiple ways, I suppose. So like the first major scaling point, I think most companies had this, and you wouldn't necessarily call it scaling, was the 2020 lockdown. So that for us, we were always 100% in office, pair programming, everyone working together. And I think the end of February, very start of March, when it was looking like there might be like a lockdown in London or in the UK, like we need to do some dry runs here, because we don't want to just be told like just wake up one day to the news and you're not allowed to come into the office. So we did those dry runs. We worked how we were going to do it. Obviously that happened. But during that time period, we realized that one, we could work remotely and we could work efficiently remotely, which was obviously it's a good thing. But because of that, it freed up our ability of where we could hire. Up until that point, we were only trying to hire developers in London. So, and that was between, I think our first hire was in 2017. It's like 2017 to 2020, only trying to hire developers in London, predominantly with financial backgrounds. And we had a very small bank balance. And so hiring was tough. And it wasn't particularly and very competitive. And so by being able to, we started off just trying to hire in the UK in general. And we found that works. And then we moved into getting a little bit more complicated. So we moved into hiring people who are in like Europe, similar working hours to the UK, and just to make life easier. And so that made our ability to hire easier. So this is less like management and more just like hiring in general, I suppose, the starting point. So that was like our first sort of like scaling bit. And so what I'm talking about moving from when lockdown happened, I think we were 2 development teams. 2020, we were 2 development teams. So we're now at 5 development teams. So I guess that's like a team a year. Oh, but that's not really a team a year. But yeah. Anyway, we're 5 development teams now, and we now have a sales office in New York. So that's now, I think, 5 people in New York, which has introduced different difficulties. There's a whole like thing about how do you hire people in different countries, which is probably maybe not the audience for this, which is like a whole other ball game. Hiring in for the United States is like, it's effectively every state's a different country. So it's like hiring in Europe. It's very complicated. So that's been interesting because you then got the time difference. as well, time difference forwards. Whilst previously we'd hired people in Greece and Italy and things. Well, obviously it's time shift the other way. So then we're dealing with the time zone element of things. But now we're looking at growing from sort of 5 development teams to 10 development teams in the next 3 to 4 years. And so what's previously been every developer reports into me is we're going to have to start introducing some form of line management. So wait, there's no way I'm going to be managing 60 people. Well, I could say I'm managing 60 people. That means I'm managing node. That's like, you can say you're managing 60 people, 100 people, but realistically, you can't manage more than 8 people efficiently unless you want to be a terrible manager. So that's something we're going to have to deal with. And, maybe people can do sort of 10, 20, but I personally, I can't do that. And we have a few people at the company who already kind of do this role, but not officially. But we do need to start thinking about staff engineers, principal engineers. We've done a really good job in sort of maintaining that culture because of the paired programming. That's really helped from a developer point of view because people see how people work. We also rotate people between teams. So developers don't join a team to stick on that team. We move people between teams, which is like people usually describe it as like I've just started a new job sort of thing. So you're working with different set of people in a different area. But also that culturally, it helps. Every team operates similarly but differently, but that also helps a little bit culturally. But having sort of staff engineers to sort of help with this is how we normally do things architecturally, it's going to help. But it's going to be new starting ground for me certainly. And I'm sure there's going to be things I'm not aware of or we're not aware of that was or the wheels falling off or something going wrong, which is okay. Is that if you don't try and make a plan for everything that could possibly fail. Just expect there to be failure and have ways of how do you respond to failures. Like the team of teams book, I can't remember. Anyway, that's like I think that philosophy is a better way of dealing with it other than trying to plan for micro plan all of those things.
I think your background, having been a dev, then a team lead, arguably almost still a team lead at the moment, and then stepping up to another layer of management, it instills confidence in the layers, all the layers, because you've been there and you've done it. And your background is the technology and the culture at the firm is built around that. I think it's quite an inspiring story because there must have been so many opportunities to compromise. And it sounds like one of the things that as a firm you managed to avoid.
Yeah, to be honest with you, a big part of that's actually Steve, rather than joking myself. Steve had worked, I'm not going to name the place he worked at a lot of places selling technology. When he went to LMAX, he was like, this is the first job I've ever had as a salesperson where I'm not having to call up and apologize because the product's broken. And he's like, it's amazing. It's just like, and so
Making my job easy.
Yeah. So when he was like pitching to like start TransFICC, he was like, we've got to do what LMAX did. I don't care what it is. That's because he was like, I've never worked anywhere where the system's been rock solid. And he was like, that's why he's talking to Judd and myself. And so to be honest with you, starting off with a business lead where they're like, they're going, I can't compromise on quality. The quality has to be there. But obviously the technologists still believe that, but to have ways to CEO now, but like have the CEO again, the quality is so important. Like, to be honest with you, really like sort of spearheads things and everything. And that really does help the situation in terms of like maintaining culture in that regard.
It is genuinely quite inspiring. I think Sam and I are probably an easy audience to hear it, as we also have that technology background, but it is great to hear, definitely. Tom, I want to thank you so much for taking the time out of your day to come and talk to Sam and I. It's been a really interesting conversation. As mentioned, that growth and the desire to expand over the next 3-4 years is going to be a really interesting time, both for you and for TransFICC as a business. So Barry, I'll hand back over to you.
Yeah, brilliant. Thanks, Tom. It was super interesting to hear that. Tom, just before we go, is there anything specifically, any direct ask you've got of anyone listening?
Nothing specifically. I mean, if you're looking for a new job, a remote first company, always happy to have applications or open positions online. Or if you work in a buying fixed income position and want to revamp your business, also reach out, always happy. But it's just, it's a real pleasure to chat to you guys. Thanks for the opportunity to have this conversation.
Thank you for listening. We'd like to thank our sponsors, RecWorks, Turntable and Quantfin. Thank you to Barry Cranford for his work organising the show. Join us next time to hear from Adam Schwartzbau and Eunice Sevimli founders at Almond Fintech about the reality of building a crypto-native business to solve an age-old problem of money transfer and get more money into people's pockets. This is Born to be Scaled.